Todd Martin. He's Asia equity strategist at Societe Generale in Hong Kong. I'm guessing, Todd, welcome to the programme, that there are perhaps brighter spots where you are rather than where we are.
Well, I think today is very much an indicator of how much Europe is affecting Asia. We have 8 shares in the HSI, down almost 3% at one point today. But we did get a decent IP number out of China of 8%. So there are positive things taking place. But I think the big thing you have to keep in mind is, in context, just remember that up until just a couple days ago, China was up 32% from the 4th of October. And what we're seeing right now is really profit-taking and probably a bit of shorting into the next set of catalysts and events coming out of Europe.
Now, China is your biggest Asian geographical overweight. Looking at sector performance, which industries right now are you favouring?
Well, we're favoring oil, also steel, and also financials. We think that these sectors all did extremely well through the end of 2008 into the first 6 months of the recovery in 2009, and we're seeing a lot of similarities between this recovery through the last month and what we saw in 2008, 2009. So we're sticking with those. Also autos I would include as well.
You've given us a little list just before you came on of some of the interesting stocks to look out for. You've also got international power generator Daytang. What can you tell me about that? What do you dislike about that one?
Well, what I like about it is that over the last month there's been a big rotation out of yield, out of defensives, and into growth. And a lot of the growth stocks had been bombed out straight through the summer into October. And what's happened is that some of the defensive and high yields have now become overly shorted and also what I would consider cheap. So as you mentioned, yeah, Datang is one. China Light and Power is another. In Hong Kong, Power Asset, 6HK, is another. So, what we try and do is we try and rotate into sectors that are unfavored, and we see some value. And then once those get expensive, then you rotate into some of the others. One sector that we just downgraded day before yesterday was the Macau casino plays. One thing is that the valuations were starting to get a little bit toppy, and the second is that there is the potential of some negative news coming out of there. There are rumors of investigations and what have you. So I say just downgrade to neutral or just get out completely and find some value elsewhere. And
are you finding value in BYD? You've already mentioned autos. That's where Warren Buffett has got some of his cash.
Yeah, actually, SG, Societe Generale in Asia, has a joint venture partner, JI Asia, and they have a few stocks that they recommend. Great Wall is one, Brilliance China is another, we'll stick with the ones that are being recommended by a joint venture partner.
And what about property? Because that's been under a lot of pressure over the past few days over where you are. You've mentioned Hopewell to us.
Yeah, I mean, Hopewell is a diversified holding company. One thing that we've noted over the last 4 or 5 weeks, and especially recently, is big moves in some of the high-end China property names like Shimao, also Evergrande. And I think what's happening now is you're getting a big, a lot of differentiation amongst where the exposure is, because as we all know in China, the government is trying to exercise policies to bring down real valuations. So you have to really pick and choose quite carefully because, non-performing assets are going to start increasing over the next 12 months, and you're going to see underlying fall in valuations. At the same time, as a developer, if you're actually pushing volumes through, and big enough volumes, you can get through a falling asset price environment and still show earnings growth.
Great to talk to you, Todd. Todd Martin, Asia equity strategist at Societe Generale. Thanks for joining us.